Okay, we are live. Hey, everyone. Can everyone hear me? Let me take care of some housekeeping before we get started. Please let me know if you can hear me. A few little items to take care of here. My pool. All right. Please let me know if you can. Okay. Thanks, Jandria. Thanks, Ken. Okay. Great. Wonderful. We'll just hang out for a few minutes. So we'll wait for some more people to come on board. It's been an interesting few days. It's in a lot of events since last week. Well, not a lot of events, but definitely some market movements. Certainly compared to the summer. As you can see, Richard is not with me. He had something come up. He's going to try and join towards the end of the call if he can. So if we get any of his nerd technical questions, we're going to leave them to the end till he comes on. Otherwise, we'll address them next time because that's not the style of trading I do. So I would hate to mislead you more than I probably already do. Yes, Andre, finally some volatility. It's been quite nice. Actually, let me just take a quick look at the volatility index right now. Yeah, it's better than it was. I mean, I'm looking at the D-vol for ETH. It's up around 38 right now. Bitcoin holding steady 37. Bitcoin not really going up too much right now. I'm actually a little surprised, but we'll see. We're certainly off the lows anyways. It's a start. All right. Dom Harley from New Zealand. Excellent. Let me just bring up my perpetual charts. And I'm hearing weird noises. Hopefully you're not hearing all that stuff. Okay. All right. We got more people joining all the time. Wonderful. Thanks. Great to have everyone with me here. So October 12th, Thursday, October 12th. Interesting. CPI today. Consumer Price Index. I didn't look at what those numbers were. I think they came out half an hour ago, if I'm not mistaken. But I can see the crypto market hasn't done anything in response to it. So that's good. That's good because I've got a whole bunch of 1550 short puts that expire tomorrow that I wanted to expire right here. Or maybe, let's have ETH go up another 10 or 15, $20 to take the pressure off. But my theta decay is through the roof. I think I've made about a quarter of an ETH in the last 3 hours. So that's quite cool, at least on one account anyways. So yeah, let me just queue up today's show. So today we're going to talk about a lot of trading today because this is what I love. And we finally got something to start talking about a little bit more versus the summer where it was boring. So now we've got things to start talking about. And we're going to talk a little bit about why option prices do the opposite of what they're quote unquote supposed to do. And it's quite a funny thing. And we'll talk about that a little bit. And we'll sort of review some strategies that I've got on. And of course, we're going to review our strategies that we put on together. I'll take this opportunity to remind everyone we've got an offer here. Trade and talk with us, 7-day free trial, anything from the silver level and higher. Sign up for 7 days for free. You get the weekly Ask Me Anything call with Richard and I and our real-time interactive trade alerts where we chat on Telegram. And we have a great time. Put a lot of we put our thoughts in there, as things and events happen during the day or during the night, whatever. So it's just a kind of a nice open forum. Feel free to join us that. David, rose 0.4 versus 0.03 expected. Okay, thank you very much. So I guess not too much of a difference. I haven't looked at what the equity markets have done, although I will be paying attention to those a lot more. Richard and I are starting to more actively trade the TradFi, the traditional markets, especially with things like oil doing these crazy moves they've been doing over the last month, really, even further back. Lots of great opportunities to be selling strangles or iron condors or doing other types of trades or directional trades and things like oil. Gold has had some movement. Of course, the S&P is always the old standard. So anyways, we'll talk occasionally about that. But of course, this is the Deribit Show. We're the crypto-only space, but it's nice to have some volatility back. So let me ditch this and pop over to some charts. And this is quite interesting stuff. So let me turn this window. Sorry, give me a second here. All right, we're over to the silly charts. So this is Bitcoin and something very interesting here. So if you remember from a previous episode, I think it was a previous episode or it was in our chat. I can't remember. It's all one big blur. I drew this trend line up when this Bitcoin was starting to come off up at the top here. And some people were saying, oh, Bitcoin's breaking down. I said, well, hang on. No. It's still in an uptrend. You know, a very, very simple, very basic technical analysis where he drew a line underneath there, and it was still in an uptrend. I said, that trend has not yet broken. This is, certainly last week. So what's happened? Well, the trend broke, and I think that was yesterday, the day before yesterday, it came down. And it came down, and now it's just sticking. And how many times have we talked about the prices in crypto making a move, whether it's 3, 4, 5%, and then sticking? How long it sticks in an area is kind of dependent upon, looking left. Anytime you're looking at charts, look left. Just like when you're, crossing the street, always look left so you don't get smooshed. Hang on, unless you're in the UK or New Zealand or Australia or Hong Kong. And those crazy countries where people drive on the wrong side of the road, look right. But for the rest of us, we're going to look left. And, we can see there's a ton of stuff going on back here. There's all kinds of people have orders, market makers, institutions, retail. They're long, they're short. That's why these areas of support and resistance are there. So I'm not kind of surprised it kind of stopped around here. I thought it could come lower, and it still might. It might just be biding its time before it does something more dramatic, but I wasn't too surprised at that. And in fact, I'm going to take a victory lap right now because I took a screenshot of a message Richard sent me. It was I think it was not last night or the night before. But anyways, the price of Bitcoin was just around 27,200, 27,300. And he sent me this message. He says, and this is privately, he just sent this to me. He said, hey, Bitcoin's looking shaky. Or are we about to bounce into a short squeeze? And I said, well, it's still clinging to the bottom of that channel, that uptrend, that up channel. I don't really trust a down move. I suspect we might get a wick through, but nothing too serious, unless it's a trend break. In which case, I think we'll go down at least $800. So let's just take out the older ruler, shall we? Here's where Richard, because it was poking through the bottom here, and I said, well, it's not really breaking the trend yet. It's not clear. Oh, look at that, $800. So because I have these predictive superpowers, you can just send me cash directly, cars, diamonds, whatever you got. I don't care. You just send it to me, and I will share with my predictive superpowers with all of you. But on a serious note, I got lucky there. That was nice. Where do I expect it to go from here? Well, I don't expect it to hang around here for too long. It could. But I wouldn't be surprised if we moved lower. But I don't think that, getting through this, unless there's some kind of a really significant news play, this is where I expect to bottom out. So if we plunge down into here, I'm going to be selling debit spread or credit spreads down here. I'm going to be selling credit spreads, and I'd probably be taking some near-term expiries, some long calls, looking for a bounce back up. Now, I'm not saying it's going to bounce all the way back up, but I'll take a little bit of a bounce up. That's what I'm thinking on the Bitcoin side. Now, this is a 4-hour chart. We can look at a 2-hour chart if we want. Same sort of thing. I've got this bar I put down here ages and ages ago. It comes down into here. It's going to get muddy. It's going to get sticky. And that's what we love about options selling, because we don't need to be exactly right when we're selling options. Horseshoes and hand grenades, we just need to be close, for crying out loud. And that's why I love it. So let's take a quick look at Ethereum. Ethereum's a different animal completely. It wasn't in an uptrend. It's just been going sideways. And you know what? Even though it's kind of poking its head down, threatening, scaring the bejesus out of everyone, it's really clinging to the bottom of its range. It's not Has it moved down? Now, if it does, and it may, I will be short Delta. I will absolutely be short Delta, and I will look for it to come somewhere down in this area. Again, it doesn't really matter in this case. The 2-hour chart's kind of goofy. Let's go back to the 4-hour chart. And I use these long dated charts when I'm selling options. There's no reason for me to look at a 5-minute. Now, if I'm doing zero date to expiration, I might be using that chart if I'm putting on some Fibonacci's or other things. But just super, super simple, silly chart. This is all we need. So if we bounce back up, if we move up, back up into this channel, 1650-ish up there, you can bet your bottom dollar I'll be selling call spreads up around 1900, and I'll sell a put spread down here too. Now, the smart thing to do is when it's bouncing on the bottom of the channels, we're selling put spreads now, right? But there's a good chance it could break down. So you got to be prepared to adjust that and handle that. That's how I'm looking at those trades. Now, what do we got on here? I think we have here, let me go back to screen share off. So we talked about that. We talked about where we're at right now in the market, what I think's probably going to play out, and how I'm going to play it. But we do have our trade on. Let me just publish the poll. Now, I just published the poll here. We have that ETH 20 of October, so it's expiring in 7 days, 7 to 8 days, next Friday, right? 1,400, 1,500 puts, right? So we sold the 1,500 puts, we bought the 1,400 puts. And we sold the 1750s, and I have the 1900s. Now, I didn't do the 1850s because I already had some 1900s in the account, so I just use those as my insurance. Now, those short calls, those 1750 short calls, they've lost 72% of their value. Nice. Now, the short puts, they're worth about double of what we've received in premium for. So we're underwater on the short put side. But man, it's going to be decaying rapidly, right? So we've only got 7 days to expire. So should we, number one, wait and see if the price of ETH goes down? And if so, roll those puts down and out in some fashion. Now, maybe we'll just roll the puts down and out to maybe the 27th of October. Maybe we'll throw it into a strangle. Maybe we'll, sell some puts at a lower price, 27th, but maybe we'll also sell some calls in order to split that risk. But, we can make that decision when the time comes, and it depends on how it comes down as well. Should we, B, close the call side, or just take our chances, run the damn thing to expiry, regardless of what it does, even if it breaches our short strikes, okay? Let it roll, because we've collected, we're collecting money from both sides, and our break even is going to be, I don't know what a break even, I didn't calculate the break even actually exactly, but take our chances. Okay. So far we've got a 50-50. Let's come back to that poll towards the end of the call, and we'll see what you guys think. Generally, I don't let stuff go through to expiry, through my strike price, unless I'm really hedged. So right now, in this one particular trading account that I typically use for when I'm talking on these calls, I have 1,550 short puts, and I have 1,500 short puts that expire tomorrow. Okay, they expire tomorrow. Those are making me an incredible amount of theta right now. I think there's a really good chance we're actually going to hold here at 1,550. Maybe we'll expire in 1,540, whatever. But if we can get a bit of a bounce up from here, I'm kind of thinking I'm going to hold them. Maybe not right into expiry, but I'll close them out maybe just prior to expiry. But even if it goes down, even if Bitcoin in the next 10 minutes goes down to 1,500, and I'm underwater on their short calls, I'm still going to be making money because I will overhedge that position with futures contracts. All right, so I have trigger orders placed down below to take me short delta in that eventuality. So even though I might lose money on those may expire in the money, whatever, I'm still going to be up overall. Okay. That's something that I never did when I was a newer trader. And a lot of people, again, just trade positionally. Now I've got all kinds of positions on all over the bloody place. So I it's hard for me even sometimes to remember what strategy we put on together as a group, because I throw it into this account and I'm like, okay, what the heck did we do? Oh yeah. Because I've got so many things. And of course, as we've talked about before, usually when you're managing an options book, you manage it as an entire book. You look at the risk from that holistic, higher viewpoint, not from all these little different strategies. Now, sometimes I'll break out a little strategy, especially if it's short term. Hey, I'm selling something 3 days or a week or two. It's a strategy. It's a directional butterfly, or it's a spread. Sure, I'll open it and close it as that. But the longer it sits there, the more it blends in. And bloody hell, I tell you, I don't remember what I did half the time. Like, I don't remember certain positions. Was that part of a roll? Did I put that on originally? Like, I don't know, right? So don't even worry about it. Trade things as an entire book. So things are looking good right now. I was a little bit worried about that CPI number coming out, but it hasn't seemed to affect the market. And maybe we can hold steady here, and those options expire tomorrow. Are going to rapidly devalue, and our group Iron Condor is also going to rapidly decay. Now I think we have Michigan consumer sentiment tomorrow. I don't expect that would do anything. There aren't a lot of numbers coming out next week. That's why I'm thinking our Iron Condor, you know what, I'm okay to let that ride. Let's just see what happens if we can take it in closer to expiry. But anyways, that's my thoughts on that. Okay. Here, let me share my screen again. And we're just going to talk a little bit about, there we go. Let's go in. So if you go into these 9 dots up the top here, we can go into options data. And this is interesting because this is going to give us the smile of every expiry. So here's the 13th, right? 10/13, 10/14, 10/15. And then we get the 20th, which is next Friday. Then we've got the monthly, and we've got the first weekly comes out in November on the 3rd. Wonderful. So we've got these smiles. The smile is simply a graphical representation of an options chain, right? So if I go and I look at the options chain for tomorrow, for this, which is the 13th of October, I can look at it here. I can take a look at all these IVs, all these IV numbers here, and that's the same thing as the options data as the smile. And we can see it's called a smile because it makes a smiley face, or like this, a smirk, right? It's a smirk because it's usually never symmetrical, okay? Because there's always a bias to one side. And all the smile is telling us is where the market's pointing, where the bias is, the directional bias, right? So there's more concern and where the steepness is. So you can see that 10/14, it's all on the left side, right? It's all on the put side. So when we're looking at this, you don't need to look at this every day, but it helps to come in and take a look. And it's the same thing as if we want to look at the volatility surface, right? We go here, trading tools, we look at the volatility surface. Same thing, right? It's a graphical representation of those numbers we're seeing in the option chain. And we can just see where the market sentiment lies. Short term, everybody's on the put side. Everybody's like, oh my gosh, the put side, put side, put side. But longer term, we can see it rise up, rise up. It's on the call side. People are longer term bullish on, this happens to be ETH. And we can go over here to Bitcoin and the same thing. And, this way back here, this is we're getting into September, way at the end here. This is September of next year. So, the halving is going to be, halfway through here. There's a lot of overall bullishness in these markets. So for a lot of new traders, what'll happen is, let's say they go out and they sell a call. Okay, let's just say it's a naked call. And the underlying price, let's say it's with Bitcoin, and the underlying price goes down. They're thinking, yeah, how beautiful. I just sold this call. The price is down. Beauty. And they go look in their account. They're like, son of a gun. The price has moved against me. What the hell's going on, right? That's volatility. And we can see that in the smile, right? That is simply an effect of volatility. Let me turn this thing off. it's the same. So volatility is increasing, and the prices are going to rise. And volatility is the primary component in pricing. Now, the same can be said if you sell that same short call in Bitcoin. And let's say the price of Bitcoin starts going up. You're like, oh, geez, oh boy, it's starting to go up. But you go and look at your P&L and you look at the price of the option, and it's going down, which is good for you. You're like, what the hell? Like I'm wrong. Like the market's moving against me. Again, it's a function of volatility. If volatility is dropping rapidly, hey, you're golden, right? That's why a lot of times it's important to not get too worked up in those daily swings in equity as we see volatility swing around. And what's happening is Vega is starting to dominate Delta, okay, and in effect dominating Gamma as well, because vol is more important than the spot move. Okay. Now you get flat markets. Yeah, every time the price moves, the option price is going to do exactly what you think it's going to do. But when you've got other factors coming in, or a financial number coming out, or a lot of fear for some reason, or for any reason, you're going to see these options prices get a little bit goofy. And this is why professional traders always quote their strikes in vol. Never in dollars. They're not going to say, hey, I just sold some calls for $15 a call. They're going to say, no, I just sold 38% vol. Because the numbers are relevant. The vol goes up, it's not good for them. Vol comes down, beautiful, regardless of what the price does. Okay? The wonderful things when selling options, though, if you sold an option 2 weeks out, we know that expiry, if that option is out of the money, it's going to have zero time value, zero intrinsic value. So we can wait. Time is on our side. Every day it's working for us. Again, it's good to stick to a standard rule. If it hits your short strike price, you're going to roll it. Fine. Push it off a week ahead or a month ahead or whatever you're doing. But that's kind of what I wanted to talk about in terms of option pricing and why it can be so darn goofy sometimes and not really make much sense. And it's all about volatility, and volatility is usually the primary factor. So that's what we talk in terms of volatility versus the dollar price of the option. All right, so we've got about 7 minutes. Richard probably isn't going to join us. Hopefully he will. Let's see. Let's go through some questions. And if anybody has any trading questions too, or what I think is going to happen, or particular trades to put on, because now we've got something going on. We've got something happening, right? So now this is the time to start talking about it, because I don't see you guys for another week. So let's do that. David, do you use Smile to gauge where max pain is? Do you find spot tends to gravitate to max pain? There's no predictive power there. I don't think there's any predictive power there. I think it was Warren Buffett or someone who said that implied volatility is for fools or something, like in terms of predicting, because it's just the sentiment at that moment, right? In 2 hours it could change. In 2 days, 2 weeks, it's going to change. So I can't remember. There's some quote there. I need to find it. I don't know who said that, but anyways, no, I don't really find it. It's nice to see where it's leaning. So what I will do is, if I get up in the morning and I see that, whoa, the Smile is off, and I can look at the volatility surface, I see it's way on the put side, it's probably because we've just had a move down, most likely. If it's through the roof, I love selling that short term. I know people say, oh, selling short-term options, it's a rookie thing to do. Bullshit. That's not true. It's not true at all. It's a rookie thing to do if that's all you're doing and you're counting on that for your income. But there's times when selling that short-term is it's almost like free money. Now, I don't want to say free money because it's never free, and things can go horribly wrong, and you got prepared for that. But when vols get skewed to one side, they always swing back. Whether it happens in 2 days, 2 hours, who knows? But they always do. And it's lovely to take advantage of that, or at least start to scale into it. I never put all my eggs in one basket. And I did forget to mention, I did make some near-term expiry trades on that big drop Oh, there's Richard. He joined us.
Hey.
Let me just share my screen one more time here, guys, and I'm going to tell you about this near-term expiry trade that I did. And this was an ETH. When we had this big drop down, came down here, what did I do? I bought calls that expired the next day. So it was after expired. It was maybe noon or something. I can't remember. And I was thinking that maybe if we had a big bounce, I could really cash in. But what happened was I scaled in. I got good prices, got them next to nothing. I think maybe I bought 100 contracts or something. I was able to get about a third, maybe 30, 40%, about a 50% profit. And I was hoping to get, 200, 400, 500% of the rest, but it just came down and died. They all expired worthless. But I don't mind taking those chances on trades like that. You're buying these options for next to nothing, and you've got a good chance of them really knocking it through the park. Anyways, Richard, we've gone through some great price action we've had. I talked about some trades I've got set up and what I've been looking for. We talked about some volatility, why option price is goofy sometimes, and goofy is the technical term that I'm going to use. And David asked the question if I use the smile to gauge where Max Payne is. I don't, because I feel it's just short-term sentiment. But I do gauge it to get into trades sometimes. When I get up, I see volatility is heavily skewed one way or another. Sometimes that could be a nice opportunity.
I kind of indirectly, it's not the smile to gauge Max Payne. What I tend to find is that if people are forced to roll out of one expiry into the next, then you can kind of predict where Max Payne's going to be on the next expiry, because they're all going to roll into, say, 25 delta short and 10 delta long or something like that, right? And so you pretty much know that the next expiry is going to be one of those that was 25 delta or 30 delta previously is now going to be at the money. But I think that's more incidental. It's more to do with people actually normally roll to get a neutral premium or small credit on the roll, right? So, so you tend to find that the market, everyone does the same. Everyone gets funneled into doing the same thing, week on week or month, depending on the expiries, and until people start going bust, and then it all breaks down and starts again. There's probably a trade there actually to monitor all that.
I'll have to run some back tests on that. And Ken just asked if we can run a session on rolling, managing tricky positions. What do you mean by a tricky position, though, Ken? If you could clarify that a little bit more, because I guess it depends on what you got going on. There could be a lot of tricky positions, but really, once you've got a lot of positions, you're sort of managing the book anyway. So you're not really breaking it down into individual positions. You're looking at the book.
I was actually just talking to somebody at the office here about just that in the end it's managing each position in options is amateur night, because it shouldn't matter to you. Your options book is a cloud of risk, and you're managing that cloud. You want to just shape that that cloud to be where you want it to be by writing or buying and selling options or futures. And if you care about one position, it means that position is too big in comparison to all the rest in your book.
Yeah, but when people are starting, if you just want to start off one position at a time to get used to it, no problem. But you'll find that over time, you'll start to layer on one thing after another. And next thing you know, you got a book, and you just look at it as a book, and it's just it makes your life a lot easier, because you're never going to remember, when did I do this, or where did this come from? Was this part of a roll? I don't know. Who knows, right? So, Ekram is asking, what's the best strategy to get out of a bull risk reversal? Well, you love risk reversals, Richard.
Well, the best strategy to get out of it is just sell it.
There you go. I guess we need more context to that question. Yeah, I mean, you can just close it, but if you want to put more details in there, Stanislav, how do you buy gamma? Okay, even based on the difference between implied and realized vol, how many times have I tried to buy at the money, low vol, 15 to 40 day calls? I almost lost money on them. After I did it, I always feel like it would be better if I never bought at all. Okay.
So I ran a test book early this year and a whole bunch of back testing to see whether there was a way to make money by being long gamma on Bitcoin and Ethereum. And I've actually found, to my shock, that because I assumed that it felt to me as if puts were underpriced, so I thought there'd be a strategy there to buy puts and hedge, but actually it consistently loses money. So I think to be long gamma on crypto, you've got to pick your moment carefully. And I think I'm I tend to be a buyer of gamma on a vol on crypto when it's kind of below 30, and a seller when it's above 40. It's kind of my rule of thumb.
Yep. At least for now, if we get back to the market from the old days, then we can change those parameters. But yeah, I think that's
that's not investment advice, right? And then there are a million caveats, but that's my golden rule. That's my guiding principle.
Yeah. All right. Question from Andrew. When doing a credit spread, both calls or puts, what criteria do you use for the buy side? Well, I have my own criteria. Do you want to talk about yours? So, like you're talking about the insurance side, I assume, Andrew, where you're talking about buying the.
Yeah, I think. Yeah, for me, when I used to trade FTSE options, I would spend about a quarter of my premium from selling the risk on cover. And so that was back in 2005-ish, 4-5. So I'd be FTSE was around 4,500, and I think the distance between the long and short leg was about 300 points thereabouts. So whatever that is, 8% of the market. On crypto, you've got a slightly steeper smile, so the protection's a bit more expensive. And I don't know whether you want to widen to compensate for that, or whether you just want to swallow it and maybe spend 30-35% of your premium on protection. Probably that.
Yeah. So the one thing I've noticed is in crypto, I have widened those strikes out. So let's say I'm selling a 20 delta, or a 17 delta, or a 15 delta. I'll probably buy the 5 delta as insurance. And I've just found that when I was wrong on a spread, I was really wrong. And I would think, oh, geez, I wish I would have bought the cheaper insurance. Could have rolled. I could have done everything. When I got them too tight, I don't know. I just find that with crypto, I prefer to have wider wings, wider distance between those strikes.
I think you with crypto, unless you're going to hedge with futures, delta hedge, which will come on to the question from Dennis, then you just got to accept that you're going to get wild swings in P&L. I mean, you can make loads of money, but it's going to be a wild ride.
Yeah. Question from S. What do you do with your delta hedges if you get a sweep and a reversal? Talk us through how and when you wind the futures hedges when you don't need them anymore. Good question. Very good question.
So this is a golden question, because we do get a lot of wicks in crypto, and they do full auto hedges. And every time there is a wick, I do lose like a day of P&L. And I just count that as part of the cost of doing business.
Yeah.
Because the thing is, the day that you don't hedge the wick is the day that it's not a wick anymore. It becomes a limitless drop. And that's even worse. So you can't be greedy. The market gives, the market takes away. As long as it gives a bit more than it takes, you win. Right?
Yeah. And the unused hedge. So you take the initial position off. What do you do with the hedge? Well, it depends on the market conditions. Sometimes I'll leave it on. Sometimes I'll unwind it. Sometimes I'll leave part of it off, or I'll just use it to initiate another position. Like I'll build something on top of it.
If it's a big hedge, you just got to unwind it and swallow the loss. Simple as that. Otherwise, you're going to set yourself up for the next disaster.
Yeah, your insurance might go from costing you $500 to $1,000. Damn it! Why didn't I do that?
Right.
What delta do you recommend for a short strangle? Too many variables there. Yeah. But if you're talking strangles, you're not an iron condor. In crypto, I used to sell 30s and stuff, but not anymore. Not anymore. Lower deltas is what I personally do.
If you've got big cojones, you can do sort of 40 delta, and there's a lot of money to be made doing that. But you're going to get wild swings in P&L. It's going to feel uncomfortable. And if somebody's watching you, like if you're doing it with somebody else's money, they're going to bail on you before you make any money. Yeah.
Last question. We got to shut it down. From Dennis here. I'm short vol. I do delta hedge after delta change change to a certain threshold. Okay, I do want to reduce my hedging costs.
Mhm.
Look into ways to reduce my gamma to save for delta hedging costs. Do you guys have a viable framework on how to do it?
Gamma is very, very linked to theta. So the more money you make, the more gamma you're going to spend. But if you you can control gamma by moving at the money positions away. So if you're delta hedging, that's great. You're making money on your hedge as your short leg moves towards the being at the money. So you can now buy the position back. You're buying it back at a loss. Don't worry, and you're then unwinding your hedge at a profit. So you should have made money because you've walked the smile. You've walked it from say 45 vol to 30 vol as it's come to the money, and then you would go and sell something out of the money, higher up the smile, to make more premium, and then re-hedge. That's how I do it. I'm always clean the book. Whenever there's a big move, I'm hedging, but I'm also cleaning the book. And then in terms of reducing hedging costs, I can tell you, I was doing a test book earlier this year, $400,000 book. In 3 months, I spent something like $15,000 in trading fees because my hedger was acting as taker, not maker. So I reconfigured the hedger to act as maker, and you don't get filled quite so quickly, and it's a bit more nail biting, but you end up making more money, a lot more money.
Well, Deribit would have been happy with you.
I'm sure they were. That's why they're nice to me. Yeah.
Yeah. All right. That's a wrap today. Now let's just do a couple things just before we go. I will remind everyone, hey, we talk about this stuff day in, day out on our Telegram chat, and we have our weekly call where we can get deep into strategies and problems you have or whatever. Just head over to roguetrader.academy and head over to the courses. Anything silver and above, you'll have access to our interactive Telegram channel and weekly Ask Me Anything calls. So take advantage of that. 7 days free. It's a no-brainer. Come and chat with us.
And you keep forgetting to mention, and the gold access, you get access to actually face-to-face Q&As with Shane and myself. What could be better?
Yeah, and I keep the jokes to a minimum. Yeah, but no, yeah, gold member. It's nice. That's great. Yeah, sorry. I don't promote ourselves enough. We should call it
the golden member.
Gold member, like the Austin Powers. Yeah. Yes. There's rumors he's going to make another movie, but it never comes to fruition. So I'm not sure if that's actually true or not. All right. Okay. I'm ending the poll right now. So we're just going to finish up here. So the poll was with our Iron Condor that's gone. And I'm glad something hasn't worked perfectly like last time. It's gone a little bit, towards our puts. We're not underwater yet on the short side, but it has put us in danger. The amount of premium we got has doubled, right, on the put side. So wait and see if the price of ETH goes down. Roll the puts, whether we're down and out into a strangle. 20th of October. 20th of October. It's a 1,500, 1,400 puts.
1,500. I before this call, I was just in there. Just before the CPI announcement, I was in there selling puts. I think I was getting EHAR. I think we've got on ETH we've got minus 20% risk reversals at 10 delta. Okay. It's good value in the puts at the moment to me. So I was in there.
Yeah, it looks like the right thing to do, but we'll see. There's no numbers tomorrow. There's not a lot of numbers next week, so I don't expect any drama unless some news comes up. But who knows?
Yeah.
So roll it. Hold on and roll it, or close the call side because we got some profit there, right? Those calls.
Have you bought the calls back yet?
Nope. Or the third option, and Richard, this is what everybody voted for because we've got animals, we've got wild, crazy people on this call all the time. They're saying, take your chances. Let's run it to expiry.
Yeah, let's do it.
Yeehaw. So that's what we're going to do. Unless it gets dramatic, then I might roll it. And I'll come back with my tail between my legs next week, but I'm happy to do so. And I think we've got a good chance of this thing expiring above 1,500 by next Friday, but we'll see. Anything can happen. It's the market. We could be at 1,300 next week. I don't know, but we're going to do a Texas. We're going to Texas style here and just let it ride. So
if it was me, I'd buy back those calls while they're cheap because the risk reversals are negative, and then wait for the sentiment to reverse and resell them. That's what I do.
That's what you would do. Okay. Well, the crowd has spoken.
Good luck, guys. Yeah.
All right. Thanks for joining us, guys. Wonderful to have everyone here. We'll see you next Thursday. Take care.